Morning. My name is Catherine Pulvermacher. I'm Executive Director of the Microinsurance Network. We are co-organizers of this event, as you know, along with Access to Insurance Initiative, whose Executive Director is over here, Hannah Grant. She'll be speaking to you shortly. And also Mr. Peter van den Broeke from the International Association of Insurance Supervisors. I'd like to hand over to Peter to welcome you as well, and then I have a few more other introductory remarks to make. So without further ado, Peter, perhaps I could invite you to the podium.
Thank you, and good morning to you all. And I'm standing a bit humble here because here's the big banner of the A2II, the big banner of the Microinsurance Network. And the IAIS is up there in this small corner, and it sort of reflects the efforts that's been made in preparation for this, because we're very happy that the Microinsurance Network and the A2II have organized this. So, good morning. My colleagues, friends, other interested people, participants in this today's Consultative Forum, and it's always a pleasure to discuss in the forum relevant developments in the insurance business and in its regulation and supervision. As IAIS, we have come to know and appreciate the forum as actually where the term stands for, a place where we get together with regulators, supervisors, industry representatives, NGOs, and other interested groups to share knowledge and information and to learn new insights from each other. And we will not be able to do this without organizations, as I just said, undertaking considerable efforts to make this happen. And special thanks, therefore, to the GPFI MEFIN for arranging the whole series of events this week, including today, the Regulatory Commission of Sri Lanka, enabling us to do this, and a special thanks to the Microinsurance Network and the A2II, who have become essential and indispensable. A special thanks to you. But also thanks to everyone here today willing to listen, share and learn, which is you here in this hall. It's of great value to us all, including the IAIS. And today we will be discussing InsurTech. And until 2 years ago, I had not heard of this. And sure, we had seen innovations, and we've discussed these, use of mobile phone technology in inclusive insurance markets, and even we had experience with conventional insurers introducing new things to work via apps or the internet. While these new things have become pretty big and potentially disruptive, we now speak about innovations like blockchains, peer-to-peer, telematics, robo-advice, the Internet of Things, big data, machine learning, artificial intelligence. But have we really understood these developments and recognized their potential impacts? The IAIS has a little more than a year ago sent out a wake-up call for the insurance supervisors in the form of its report, FinTech Developments in the Insurance Industry. And you can pick up a copy if you like outside or go to the website to find the report. And I'll be talking to that later today in more detail. But to give you already a bit of flavor into this, the report highlights several challenges for insurance supervisors, including balancing the risks and benefits of innovations and creating an environment that fosters innovation through approaches such as regulatory sandboxes or innovation hubs, evaluating and, if needed, adjusting the potential regulatory framework, considering the adequacy of current reporting requirements in monitoring trends and the potential buildup of risks connected to new technologies, understanding how innovations work and are applied to ensure adequate assessments of new products and business models. In a follow-up to this report, the IAIS is looking at various new things. There's a project on algorithms and artificial intelligence, starting to get the basics out there, a sort of technical note to help our members understand what this really is, but also on increased digitalization in the insurance business model with particular conduct, consumer protection implications. Also work is being done on personal and other information, so big data is likely going to be looked at. And we are completing work on an application paper on the use of digital technology in inclusive insurance. So we're looking at the new frontiers while still staying committed to inclusive insurance as something we still foster as part of our access agenda. So it's good to discuss these innovations here further in forums like this today, and to help each other, to help the policyholder. So I wish you all an interesting and informative meeting, and I guess I'm handing over now to the next speaker.
Thank you, Peter. Yes, I'm afraid this morning and through the day you're going to be seeing a fair bit of me. So again, on behalf of the Microinsurance Network, I would like to extend to you my sincere thanks for joining us today. I know that many of you have come from far away, and it's always a commitment to be away from your families and even out of the office for some days. So thank you very much. Thank you to MEFIN and to GIZ for their support as hosts of this meeting this week in the larger MEFIN context. This theme of InsurTech, as Peter said, is one that is cropping up not just in the insurance industry, but in many industries, and I think is going to be demanding more and more of our attention over the coming years. So given the importance of the topic of InsurTech, this is what we've selected as the theme for our 3 consultative forums this year. There will have, as usual, be 2 more events. The next one held in Africa in May, which is taking place on the 9th and 10th of May 2018, alongside the Africa Insurance Organization Conference in Accra in Ghana. As Peter mentioned, we co-organize these events in partnership with the IAIS and also with A2II. And our purpose is to bring all of you together, to bring together industry and insurance supervisors so that you can debate and discuss and learn from one another in a neutral setting. The Microinsurance Network, as you may know, has had its origins as a working group of CGAP back in 2002. And today is a membership-based organization with more than 300 members. Our members represent a broad range of stakeholders, and what brings us all together is our desire to enable low-income and emerging customers to access efficient, trustworthy, and client-driven insurance offerings. So how can InsurTech enable inclusive insurance? Will it indeed provide the much-needed solutions to reach underserved and unserved customers? What are the challenges that InsurTech startups are facing? And how does the insurance industry look at InsurTech applications in relation to their business models? What challenges are insurance regulators facing with these new entrants to the insurance business? These are just some of the questions that we're going to be considering here today by exploring concrete examples and using those to find a way forward. We're also counting on all of you to share your own experiences from your own countries and professional lives, to use those, draw on them, and suggest new initiatives. Before I hand over to Hannah Grant, I would like to just highlight some housekeeping points. The event today will be web streamed live. We'll be checking shortly that that is all functioning as it should. And the link for the web stream is mentioned at the bottom of the agenda in your folders, where you'll also see Twitter handles. I think that there are printouts on your tables with the Twitter handles and also giving you the information you need to access the internet here in the room. Do feel free to use the Twitter handles that you might for tweeting key messages or quotes from speakers. And you can see that I'm a technologically challenged person who does not regularly use Twitter. So if I'm sounding like I'm fumbling around with the Twitter speak, that's why. But I'm familiar with other technology. So another final request is to fill out the evaluation forms that are also in your folders before you leave. I would encourage you just to have a quick look at the questions that are being asked so that you're mindful of them through the day. These are incredibly important to us as we try to shape future forums and adapt them increasingly to your needs and wishes, because these events are, after all, organized for you. So one final point is that the lunch will in fact be served at 12:30, so don't be alarmed if our session, our panel 1 session, goes on a little bit after 12. That's actually intentional, and that's just due to the fact that the restaurant only opens at 12:30. So more about that later on. Without further ado, I would like to hand over to Hannah.
Thank you, Catherine, and good morning to everybody. It's an absolute pleasure to be here again in Colombo today and to welcome you to the 12th Consultative Forum, and actually the second of our Consultative Forums that's actually taken place here in Colombo. So it's great to be back again. The Access to Insurance Initiative is very happy to be organising this event together, supported by our partners, the International Association of Insurance Supervisors and the Microinsurance Network. And also we'd like to thank our hosts, GIZ RFPI. Over the course of 2016 and 2017, the A2I mainly worked with supervisors to understand better the unique regulatory challenges and opportunities of using mobile insurance. We organised the first ever mobile insurance conference in Cameroon in West Africa in February last year. And we actually also published a study documenting the current trends and status and supervisory and regulatory challenges in mobile insurance. Actually, copies of these reports are available as you're sort of walking in on the table just after registration, so do please help yourselves. However, one of the things that sort of came out to us from doing these events is actually that the use of mobile insurance as a sort of disruption or distribution channel and payment platform is not the only technological innovation which is disrupting insurance markets. But the introduction of digital platforms, such as comparison sites, digital brokers, chatbots, are also now confronting supervisors with new questions and also creating new opportunities for the market. In addition, new business models enabled by technological innovations, such as peer-to-peer insurance, usage-based insurance, and on-demand insurance, are also starting to emerge. I think a paper by the Center for Financial Regulation and Inclusion, published last year, cited 157 such sort of insurtech innovations being seen across Asia, Latin America, and Africa. It also revealed actually that there are still only very few examples of how big data is being used, how data analytics and also blockchain distributed ledger technology. These are very few examples of these currently sort of in the inclusive insurance space. However, there does remain a lot of potential here. To trigger some sort of discussions on these topics, actually during the 13th International Microinsurance Conference last year in Peru, the A2I actually facilitated a panel on mobile insurance and digital technologies and the role of the insurance supervisor. The panel actually reflected on something which was called the fourth sort of industrial revolution, something Professor, I think, Klaus Schwab, who's founder and executive chairman of the World Economic Forum, argued is the fusion of the physical, digital, and biological worlds, sort of impacting all disciplines, economies, and industries. So this goes beyond the third industrial revolution, which was really characterized by the use of electronics and information technology to automate production. And it goes beyond it really in three quite distinct ways. The velocity of the change, the scope of the change, and the system's impact of the change. I mean, the speed of the change really has no historical precedence. So when compared to previous industrial revolutions, change is really occurring at an exponential rather than a linear rate. Moreover, it's actually also disrupting almost every industry in every country. And the breadth and the depth of these changes heralds the transformation of the entire system of production, management, and also governance. So when it comes to opportunities for greater access to insurance, these are exciting and unprecedented times. There is so much potential for insurance products to be available in more accessible and more affordable ways, and also achieving this in a sustainable, to achieve this in a sustainable manner requires all key actors, so the industry, new tech startups, regulators, supervisors, all to work together. It's with all of this in mind that the A2I, together with its partners, decided to focus on the topic of InsurTech for our consultative forums this year. As Catherine just mentioned, this is actually the first of 3 events which we'll be organising this year on the topic, with subsequent dialogues held later on in the year in Africa and Latin America. But Asia is really driving fintech worldwide. Over the past 2 years, fintech financing in the region has more than doubled, from 5.2 billion to 11.2 billion, contributing to nearly 43% of the global fintech investment. 6 of the 7 largest fintech companies are actually from Asia. So it's really becoming sort of a global fintech sort of innovation and sort of hub for the world. And we're now starting to see insurtech sort of follow this trend, with some exciting innovations starting to happen in the region. So we are therefore particularly delighted that this is the region in which we're actually kicking off our Consultative Forum series for this year, as we expect many of the examples presented and discussed today will actually enrich the agendas of our events taking place in other regions later in the year. Anyway, with that, I would like to conclude my opening remarks and welcome you all to enrich today's discussions with your ideas and experiences. Thank you.
Thank you, Hannah. I'd now like to invite Arup Chatterjee to come up to the podium. Mr. Chatterjee is Principal Financial Sector Specialist at the Asian Development Bank. Is this working? Yes, sorry. I'm a bit smaller than everybody else. So. Arup has got 3 decades of experience in the operational, regulatory, and policy aspects of the insurance sector in Asia, Africa, and Latin America. In his current role, he's responsible for leading financial sector development initiatives and providing operational support in the areas of insurance, contractual savings, and financial inclusion. Could I invite you, Indrani, to come and also make some remarks? Thank you.
Good morning, ladies and gentlemen. First of all, let me congratulate the A2II team for co-organizing this consultative forum in Sri Lanka in collaboration with the IAIS and the Microinsurance Network. Well, I wish to welcome you all as the immediate past chairperson of the Insurance Regulatory Commission of Sri Lanka. We changed the name from Insurance Board to Insurance Regulatory Commission very recently, few months ago. The insurance industry in Sri Lanka is solidly established, but small in comparison to some other countries with developed markets. However, as the members of the global insurance community, we have some common issues that need our collective attention. The insurance industry, being a strong pillar of the financial sector of a country, aids in the facilitation of trade and allows for the efficient allocation of resources in the economy. Therefore, the insurance regulators have the greatest opportunities to set in place a system that would not only support the growth of the industry, but would also ensure that such growth will positively impact the overall economy and that all stakeholders in the industry are adequately protected. That stakeholders includes the people, the clients, and the citizens as well. When we talk about insurance and its contribution to the overall economic growth of a country, the most important thread which binds the two is the people. Regardless of whether rich or poor, urban or rural, male or female, all citizens must have access to insurance. In other words, there must be inclusive insurance in all countries. As we know, governments across the world are focusing on financial inclusion, of which insurance is a vital and essential element for economic development and poverty reduction. Poverty reduction and elimination of social and economic disparities are key challenges for many of our countries. Microinsurance in this context can be considered as a tool to minimize the protection gap which prevails among different communities. By allowing for the transfer of risk, people are afforded the freedom to make economic and social decisions that they would not have been able to make without some form of economic safety net. Thus, it allows people to take greater care of themselves and make decisions in the best interests of their personal well-being. Having said that, I believe insurance, whether general or life, is yet to be recognized as a risk mitigation tool by majority of the population. Issues such as consumer awareness, understanding, trust and perception, and low disposable income of many segments in the population are some of the contributory or causative factors to the low income penetration in many countries. The low penetration level is an indicator that there is a disconnect or a broad gap between the people or consumers and the insurance providers. Therefore, there is a dire need to bridge this gap. The Insurance Regulatory Commission harbors a serious concern and has an abiding interest in minimizing this protection gap. The regulator have been encouraging the insurance providers to be more forward-thinking and to introduce innovative products at affordable prices. Currently, except for a few registered insurers, there are some organizations in the informal sector who are engaged in developing and selling microinsurance products. However, the Regulation of Insurance Industry Act that governs the whole insurance industry, the Act, RII Act we call it, that does not specifically deal with microinsurance as a subcategory, and as such, there exists a legal lacuna, as the current law does not provide for any mechanism to regulate such institutions dealing with microinsurance products. For this purpose, the regulator has been engaging with the World Bank to do an assessment on the need to regulate the microinsurance sector. A report was presented that analyzed the microinsurance landscape in Sri Lanka and provided certain recommendations on ways to proceed in regulating this sector. I should not forget the microinsurance conference organized by the Munich Re Foundation a couple of years ago here in Sri Lanka, also presented a report explaining the current situation at that time of the microinsurance sector in Sri Lanka. But it was the most difficult part is to gather accurate information of the existing situation. That is the most difficult part. Anyway, at last, a project was approved, funded by the World Bank, to formalize the microinsurance sector, and it is in the pipeline to be implemented in this year, in 2018. This is important as the informality raises a series of regulatory considerations. Prudential risks, consumer protection risks, and the regulatory arbitrage risks are some of the main issues that informality creates. Therefore, formalization is important for regulators who are seeking to facilitate an inclusive insurance market. As highlighted in A2II information paper, InsurTech, it's a new thing I know in some countries, the variety of emerging technologies and innovative business models that have the potential to transform the insurance business holds vast potential for improvements in insurance product design, better risk assessment, development of better tailored products, and reduction of administrative costs. I hope this consultative forum will have a fruitful and productive dialogue on positive as well as negative sides of the InsurTech and how InsurTech would facilitate the regulatory role in the field of inclusive insurance. Thank you, and I wish you all the very best.
Thank you, Indrani. So let me again welcome Mr. Arup Chatterjee. So Arup, over to you.
Very good morning, ladies and gentlemen and friends. Particularly, I'm grateful that Mrs. Sugatha Dasa is also present here. I have attended 2 consultative forums representing ADB, and both happen to have been in Colombo. So that's always something special coming back here and speaking in front of friends, I would say, because many of you know me so well. So I was wondering, when there was a long list of speakers before me, what is what should I set before you in terms of the landscape for the emerging consumers, so that you have a so-called fitting start for the day. And then I realized a lot of things which I wanted to say have already been said, because I don't want to grab things which we will plan to discuss in the other sessions. But nevertheless, having done more of a 360 degrees in the insurance sector, having joined and worked for an insurance company, then also worked for the Ministry of Finance, then with the insurance regulator, then the standard setting body, the IAIS, then with ADB, I thought, let me see how different stakeholders, if I may be allowed to say so, how they perceive this challenge of InsurTech, basically. So maybe in the next few minutes, what I will be sharing with you is how we as stakeholders are thinking of rising to the InsurTech challenge. And maybe the discussions will be in the reverse order following my remarks. Let me start with my present organization, how we look at fintech, and then more specifically at insurance. We are seeing, as everybody else, that incomes are rising. A lot of Asian countries are transforming from low income to middle income. But at the same time, productivity is decreasing, inequality is increasing, wages are also stagnant. And the role of the financial sector is to ensure that this disparity is reduced, wages increase, consumption increases, so that the aspirations of the people are met. And that is something which is a priority which is topmost so far the political elite or the politicians in the country are concerned. And that's where regulators are increasingly challenged in terms of developing the market or creating the enabling environment. The players have a challenge because to enable the market, to enhance financial inclusion, number one, they need to understand the risk. Second is they need to put systems in place so that the distribution cost becomes low, and insurance, especially as a financial inclusion tool, makes sense to the people. And that is where previously, despite efforts made by the regulators, governments, the penetration of insurance has not increased, as we understand, in the classical sense of the term. But at the same time, population in Asia and even in the rest of the world, they all insure. If we don't insure through a formal mechanism, we all self-insure in some sense. So saying people are not insured may not be the right term if you take a broader view of insurance. Even the housewife who is putting a handful of rice away for rainy days is also doing risk management and keeping something in the pot as insurance. So one of the reasons why insurance has not succeeded is because of lack of trust in the market. In spite of many efforts, even when public sector insurers have been involved, state-owned insurers have been involved, there has been tremendous lack of trust. And that is something which is quite universal all over the world, at least in 50, 60 countries that I have visited and asked people, this message echoes that way. And now we have fintech, where we feel that that's the magic wand, the silver bullet, with the help of which we can really penetrate the market and make life easy. The second observation is if you see today, 50 years and also 50 years back, the state used to take control over a lot of things. The entire risk, whether in terms of educational expenses, pensions, and even to compensate people after the major calamity or disaster, the state was always at the forefront. Today, that task has increasingly been delegated to the ordinary citizen. So, of course, that is something for which adequate awareness has not been built. The citizens have been tasked with managing more risk without being properly equipped in terms of how to manage them, understanding those risks. And this is also an area where fintech can play a role. And the third area, of course, is in terms of managing major calamities. Populations have been managing risk. They have been doing that in different ways. What they don't understand is the difference between managing a covariate risk and an idiosyncratic risk. So if it is a health insurance, if 100 people live in a village, 90 are 90 are healthy and 10 people get sick, 90 contribute for the welfare of the remaining 10. And insurance seems to be working in an informal sense, and they don't find a reason to purchase insurance. But when all 100 get affected in the event of a covariate risk, then who will step in? The government takes time to make funds available, and the community which was there doesn't have the resources to take care. I was in one of these conferences of World Conference of Disaster Risk Reduction, where the chairman of the General Insurance Association of Japan, he mentioned that after a disaster, and that was after the tsunami in Japan, he said, our job was to ensure that people get back to their normal lives as early as possible so that they can earn their bread and butter. The children, the families can live in tents and makeshift shelters, but how can insurance help them to earn their bread and butter? Building back better is something which comes later. So that was one thing which resonated across, and there was also this, the minister from New Zealand, who said that my job as a minister is to ensure that the least number of people get killed. And so there were, in the Christchurch earthquake, buildings were damaged, but there was no person who got killed. So he said it's just like driving a car. The car can get damaged, but because of the safety devices inside the car, the driver and passengers should get saved. So there is a role of technology everywhere, and insurance has to make itself relevant to the real sector in terms of succeeding in terms of using these technologies. If you see the digital insurers, the new breed of insurers like Zhonggan in China, what they are trying to do is to link their business with the real sector. So when they are trying to develop agriculture insurance in there, they are using all these types of user-based insurance concepts of using blockchain, concepts of using artificial intelligence, face recognition, everything. Face recognition for chickens also. It's not for human beings. To ensure that a dead chicken is not supplied to a consumer. And It is the insurance element which compensates the customer in case a dead chicken has been supplied. So everything becomes very, very transparent. So linking with the real sector and also looking at the supply chain and the value chain to segment the risk and understand where insurance can make sense and where insurance does not make sense in terms of the cost and benefit becomes important. So we as insurance stakeholders need to see insurance as a part of the solution and not the solution. I think if we do that, the insurance solution will become more and more efficient and effective. So to conclude, I would say that there is a disconnect which exists between the perceived disruption and what the insurers and the other intermediaries are willing to invest. We will discuss a lot of things. We will talk of the opportunities, but then as insurers and regulators, when we are asked to actually implement things on the ground, it will not be that easy. So, and that there lies the challenge, and one of the issues here is to understand the risk, basically. The regulators, once they understand the risk, possibly they can come up with solutions. If you see the 3 pillars of regulation, the prudential, the market conduct, and the governance, I think most of the talk which is happening is in the market conduct space and little bit on the governance space. But on the prudential space, nothing much is being talked about, and that is where I think more discussions needs to be focused on. The other area where we also don't talk a lot is in terms of having the preconditions in place. Okay, you might have the best technology solution, but do you have the preconditions? Do you have the broadband? Do you have the electricity? And do people really have access to smartphones? And ultimately, who is the emerging consumer? Is it the person living in the city, or is there somebody who is living in a rural setting, or are you trying to segment them in terms of income levels? So those are types of things which are very important when you tailor-make the product. And with the use of technology, when you have more real-time data of the risk, I think the differentiation between risk will become more and more blurred in the future. And what I see is the distinction between short-term, long-term, life insurance, non-life insurance, all these things will also get blurred. The customer doesn't see risks as long-term and short-term. It is we as insurers or from the insurance industry or the regulators who see these things as long-term and short-term. So with better data, with better understanding of risk, it will be easier to tailor-make products and services along with it to come up with solutions which are real-time in nature. There'll be also for very specific periods of time. You don't need insurance throughout the year, say. You might not need insurance if you are not for fire and electrical damage, if you are not using electrical appliances. You are away on a holiday, you have switched off everything. You might require insurance only for theft. So data will help middle-class consumers. The economies are becoming middle-class. That's why when we talk of the emerging consumers, they'll be increasingly middle-class. So though we have that access angle definitely in mind, but we should also be careful that the new customer will be middle-class. They will be living in cities. Fewer will be living in rural areas. And we need to tailor products, tailor systems, tailor regulations to ensure that the customers benefit from the technology. And finally, to wrap up, I think even the best planners, and Singapore has been one of which is seen as a role model for many, even in the fintech space. Sometimes they also make mistakes in gauging the future. They had the best provident fund system, they had the best housing system, they also had the best health system for their citizens. But what the planners failed in their wisdom, and this is only in hindsight you realize, they never thought they never factored that Singapore will become a high-income country and not remain a middle-income country. So whatever savings, etc., was factored in terms of when one retires, they had that corpus, but by that time, Singapore had become a high-income country. So if you talk to a taxi driver, he will say, yes, I used to work as an accountant somewhere, but I have to work extra because you have to work till you die, what they say. So basically to make the two ends meet. So technology definitely will definitely be a tool, but may not be a panacea. So with those words, thank you very much for a patient hearing. I know I have purposely not talked about technology, it was on purpose, but we have lots of sessions coming up, and we will be tailoring some of those discussions around technology and how we can develop solutions, keeping this background which I explained to you in mind. Thank you so much.